a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about best and worst performing areas of the first half. It was a great first half for stocks. Stocks defied skeptics and climbed over all walls of worries. And the rally was primarily driven by mega cap tech stocks that benefited from optimism about artificial intelligence and further the economy, labor market, housing, and American consumers. They proved to be much more resilient than experts had believed earlier. So for the Nasdaq, it was the best first half since 1983. The index, the tech-heavy index, gained 40%. The S&P 500 index also did very well, mainly because of its exposure to those technology giants. It was up 16% and best first half since 2019. The Dow was the relative underperformer, gained about 4%, and small caps were up about 7%. Bitcoin surprised, it surged 80%. Lately, Bitcoin has been going up because of hopes for a spot Bitcoin ETF. Now, since Nasdaq was the best performer, the gains were driven by these stocks. NVIDIA, which produces the best AI chips and has about 90% share in those AI chips market, surged over 190% because these are the picks and shovels used in AI applications. Meta Platforms and Tesla were up about 139 and 113%. Cybersecurity provider Palo Alto Networks, 83%. AMD, which is a distant second to NVIDIA and AI GPUs, gained about 76%. Now looking at the sector, technology surged 42%. Again, gains were driven by Apple, which is now a $3 trillion market capitalization company, Microsoft and NVIDIA. It surged 42%. Communication services, because of its outsized exposure to Tesla and Amazon, gained 35%. Sorry, consumer discretionary, because of its outsized exposure to Tesla and Amazon, gained 32%. And communication services sector, because of its exposure to Google and Meta Platforms and Netflix, it gained 35%. Utilities, investors did not like defensive areas of the market, so utilities was the worst performing, down about 6%. Energy, one of the best performing sectors of the last 2 years, lost 2%. Financials, because of all that happened in the regional banking space, lost about 1%. Then looking at the best and worst performing ETF areas, Bitcoin, as I mentioned, gained 80%. Blockchain related companies and Bitcoin miners, they surged. A tiny blockchain miners ETF, WGMI, gained 189%. Then all ETFs, ETNs that have a lot of exposure to these fangman stocks, Facebook, Apple, NVIDIA, Google, Microsoft, Amazon, and Netflix, they surged. Many actively managed ETFs which had outside exposure to to NVIDIA and Tesla, they did quite well. This ETN, FNGS, gained more than 73%. Then semiconductor ETFs, I talked about NVIDIA and AMD being picks and shovels in AI applications. They did pretty well. Semiconductor ETFs like SMH, SOXX gained more than 50%. Worst performing areas were carbon offset, short-term VIX futures, natural gas, cannabis, and regional banks. Now let's quickly take a look at some of the best performing ETF areas by going to the code pages on Zacks.com. So the first one that I mentioned, this is by Valkyrie Bitcoin Miners ETF. It's a tiny ETF, about 13 million in assets, 75 basis points expense ratio. So to learn more, you can use the link on our code page and go to the web page of this ETF. Now, one of the reasons why these ETFs have not seen a lot of investor interest despite their excellent performance is that many investors were burnt last year because of the underperformance of this space. So probably they gave up on this space altogether, or many may be waiting for the real spot Bitcoin ETF and their hopes that it will launch maybe in the few months. Who knows whether the SEC will approve or not approve. But that could be one of the reasons that many investors want a spot Bitcoin ETF for exposure to the space. So this ETF, WGMI, has top holdings are AMD, Applied Digital, Argo Blockchain, Bitform, etc. Now, the second ETN, which I'm highlighting, is by microsectors. So this is an ETN. I have talked about the differences between ETFs and ETNs, and ETNs are subject to the credit risk of the issuer, BMO in this case, which is something investors should always remember. This has about close to 130 million in assets and has an expense ratio of 58 basis points. Again, to learn more, you can go to the web page using the link on our website. So this has exposure to FANG plus stocks, equal weighted. It tracks an index which has equal weighted exposure to FANG and FANG plus stocks. So these are Facebook, Apple, Amazon, Netflix, Google, and additionally the plus stocks, AMD, Nvidia, Snowflake, Tesla, and Twitter. Then looking at the chip ETFs, and I have talked about chip ETFs many times, so I'll not spend a lot of time on this, but you can read our research report articles, and this ETF has outsized exposure to Nvidia, then Taiwan Semi, Avago, Broadcom, and ASML are the top holdings in this ETF. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to all our videos, our video channels, so that you do not miss anything. And I'll see you next week.